You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 4th day of May, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first broadcast is for our members only and those who are taking our free trial. Later in the show, Michael will tell you exactly how you can take the free trial. I'm also experimenting still with my webcam. The webcam part is only viewable by those who are tuned in via the YouTube channel. Now, I said we have 2 broadcasts each day. The live training room is for members and those who are taking their 1-week free trial, but the afternoon broadcast is open to the public. We go live every day, every trading day at 12 noon Eastern. There's 2 ways to join the show. The best way to join the show is to go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. The way it works is once you go through that 30-second registration, you'll get an email right before the show starts each day. And all you have to do is click the link in the email, and it automatically logs you into the go-to platform where you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join the show. Just grab any internet-connected browser and point it to youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, but we archive each and every daily show. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So as we do, let's open with a word of prayer. Our scripture today is Isaiah 40, verse 8. The grass withers and the flowers fade, but the word of our God stands forever. Now this verse reminds us no matter how scattered we may feel, we find our ultimate peace in God. The truth we sow into our hearts is as sturdy as a tulip bulb, which, you might not know this, no matter the weather or relocation, finds a way to bloom each spring. As you and I get older and our physical bodies start to slow down and break down, the word we have planted in our hearts continues to bloom and multiply. The beautiful blooms can only be seen for a season, but the strength of the plant under the earth continues to strengthen and multiply. Let's pray. Heavenly Father, we praise you for the spring flowers which bloom every year, and for the squirrels who place them in places which surprises us, reminding us you have a sense of humor. O God, Elohim, creator of all things and all of us, we give all glory to you for our lives and your purpose for them. As spring ushers in the beauty of blooms and the return of green grass and leaves returning to the trees, let it remind us of the new life you promise us in Christ. Father, we specifically take time today to pray for those in our lives who you have placed purposefully to draw to you through us. Let us be rooted in your word firmly and ready to love others throughout the day, today, and always. In Jesus' name we pray. Amen. Amen. All right, let me give you the numbers from around the world. These are, well, we'll start in the U.S. with the cash markets, or the indices as they're called. Of course, we have a Fed announcement this afternoon. Interestingly enough, stocks are down. The cryptos seem to be rallying just a bit. All right, here we go. The Dow is currently down 17 points. The NASDAQ is down 133. The S&P 500 is down 13, and the Russell 2000 is down 18. Now for the Russell, that's a drop of almost 1%. For the NASDAQ, that's a drop of a little over 1%. In the commodity basket, crude oil up $3.83, trading 106.24 last. That's a gain of $3.83, almost 4%. Gold down $2.20, trading 18.6840 last. Silver down 24 cents, trading 22.42 last. In the Asian markets at the close, the Nikkei dropped 29 points. The Shanghai was up 71, but the Hang Seng fell 232, which is a little over 1%. And in the European markets at the close, FTSE down 67, almost 1%. The DAX down 68, and the CAC fell 80 points. And for the CAC, that's a drop of 1.25%. So that gives us a mixed day in Asia, a red day in the UK, and right now it's a big red Radio Wednesday Fed day here in the US of A. Now the Fed announcement comes out at 2 p.m. Eastern. There will be some extreme volatility at that point. We are expecting a 50 basis point increase, or half a point, which is going to push up those adjustable rate mortgages. So if you've got one that needs to be refinanced, you better get on it quicker than later. And then at 2:30, this is where the real volatility comes in, because the Fed will, Jerome Powell, the Fed, will deliver a prepared speech, and then the real volatility kicks in as he begins to take questions from the audience. And unlike some members of our administration up on Capitol Hill, he actually takes questions from anyone in the audience who has a question. He doesn't have a list he works off of. There aren't certain people that he's only allowed to ask questions to who will throw a softball type question. So my best advice is, ahead of 2 p.m. Eastern, put the mouse in the drawer and leave it there until the Fed Q&A session is over. Now, if you're an experienced trader, of course, you'll probably want to take advantage of the volatility. But if you're brand new to trading these type of events is almost a guaranteed way to blow up the account you worked so hard to put together and fund. So with that, we'll go to Michael, get a recap of everything that happened in the live training room this morning. After that, I'll be back. We'll take a look at the Logic 247 alerts, the concierge trade alerts, and if any point during the broadcast, if you have a question, simply type it into the question box, and either Michael or myself will be happy to answer it for you. So with that, I give you Michael. Take it away.
All right. All right. Good afternoon. I'm sorry. Good afternoon, everyone. Today is Wednesday, the 4th day of May, 2022. Now, if you've not taken a free trial with us and you want to take a free trial with us, go here to eminitrainingschool.com. Let me look in the question box here. Actually, let me look in the attendee box and see if same fellow. Larry, were you here yesterday when all your questions were answered? You didn't ask any more, so I wasn't sure if you were present yesterday when all the questions that you asked yesterday were answered. I don't know if you're here right now. As a matter of fact, it says you're here, but I don't know if that you are. Okay, go ahead and type it in. I'm going to go through this and I'll answer your question. Yes. Okay, back to me. Okay, I have a doctor's appointment today, so I can't spend the time on it that I did yesterday. But let's go through this right now. eminitrainingschool.com. If you have not taken a free trial and you want to, go here. All we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on the confirmation link. If you don't click the link, we don't know you took the free trials. Make sure you click the link. Okay. Today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 4th day of May, 2022. Made 34 ticks in crude, 10 ticks in gold, and 4 ticks on the ES. Put us at 490 on the morning session. Yeah, only 490 this morning on the morning session. It's a big miss from the last couple of days, but that's okay. Today it took 5 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 22 trades. So on the month now, we're at $3,577 a contract. That's over 3 trading days, averaging $1,192 a contract per day. We've now gone 147 consecutive business days since our last negative day, and we have gotten our goal on 85 out of 85 days so far this year. That puts us at $93,328 per contract, averaging $1,097 a day on the year now. This is the farthest we've gotten into a year, maintaining an average over $1,000 a contract so far. If you were to quit when you got your goal for the day and you were to add 1 contract a month, you would have only had to work 11.8 hours so far this year, and you would have averaged $2,440 per contract I'm sorry, that's not per contract. That's per hour, just straight up per hour. Okay. All right. So the trades. Yes, I would prefer to do it that way. I have time later this afternoon to set you up. But I have a doctor's appointment. That's why I got to go fast right now. Send me your email. Send an email to tech, TECH, at cfrn.net, or you could send it to support@cfrn.net. Tell us what trading platform you're on, and just give a phone number, and we'll get in touch with you. I have time this afternoon, but I don't have time right now. Okay, so I was going to go through the trades. Now, I didn't have all that many trades today, a couple 22 trades or something like that. And the trading wasn't as volatile as it was yesterday, so there wasn't as much opportunity as there was the last couple of days, actually. I mean, we have FOMC, so it doesn't surprise me. But I did miss some really nice trades, as you see right here. I could have picked up 10 or 15 ticks right there. I did pick up 10 ticks here, and I could have picked up another 10 right there. Could have just about doubled my day total right there in that couple of minute span. But anyway, I got to break even here. I missed a trade here. I grabbed 10 ticks there. I missed a trade there. I stopped out on this one. Yeah, I just stopped out on that one. I should have probably gone long from back here, so it was probably a mistake on my part. Then I picked up a couple of ticks here. So I went from 10 down to 2 to 4 right here. Then I had a break even, and I went from 4 to 8 right there. And then I went to 10 right there, and I had one more break even. And that was it. During the break, highest probability trades, 1 right here. one highest probability trade. Okay. Crude oil, we had the majority of the trades today. I'll just go to the ES. We only had a couple of trades on the ES today. And scroll back all the way to the beginning. It's May 16th. Okay. Well then we have plenty of time. All right, so we have nothing all through here, just no trade setups. It was just a bunch of garbage, and it was not looking so good for anything. There was one trade here that was a high probability trade, not the highest. There was another one here, same thing, going the opposite direction. See right here, everything was good, but the MA1 was not right, so that's what made it from being the highest. Gave a couple of points. Same thing here, gave a couple of points. Then it got up to the zone, got away from the zone. In here, we picked up this trade for 4 ticks, it looks like. And we had a break even on that trade right there. Looking to see if there were any highest probability trades anywhere that, where we had any kind of a trend that might have been something we could have grabbed more. I was seeing this happening and I was looking at it, I was saying where it was going to go, but it never gave us the pullback during that little span right there. Looks like there might have been a trade right in here we could have taken. I just missed it. And got all choppy and sideways. One more trade in here would have been a break even. Choppy and sideways. More chop. More chop. You see how close the dynamic support and resistance dots are pretty much all the way around here. Bert calls them railroad tracks. When they're like that, it's really hard to trade because it means you have no range really and no volatility. And that was pretty much the whole day on the ES. There really wasn't much to do today. Okay, and crude oil. We did have some nice trades on crude. We had some big misses on crude. But when I was starting to complain that we didn't have that much opportunity, I did get one 19 tick trade. I'll get right to that in a minute. Started out right here. There was a nice trade right here. 931. It looks like right at the open. There was a long here, and a long here. All would have worked out perfectly. Okay, that would have doubled my day total probably. That and the ones I missed in gold right at the beginning, that would have doubled my day total. But there was a break-even trade here, a missed trade there. Then on the first trade here on the crude, we picked up 10 ticks on the very first one. Then the next one, we picked up 12 ticks, got us to 22. Had a break-even there, a stop out there. We picked up, what time is it? Shit. We stopped out there and that put us down to 14, and we picked up 2 ticks to get us to 16. Then I had a break even all the way over here, another break even. I picked up something there, then I stopped out. Now I didn't count this pickup here, whatever that was, and I stopped out here and that put me back down to 8, I think. No, I stopped out somewhere in here that I didn't write it down. That put me down to 8, I think. Did it? No. Okay, that put me down to 8. That's right. This one put me down to 8. All right, and this was my 19 tick trade here that put me back to 27. And then I thought I went from 8 to 2, but I wouldn't go from 8 to 2. I'd go from 8 to 0. I was just looking at my writing. I was screwing up. But I went from 27, then I went to 32, so I had a 5 tick trade right there. And then went from 32 to 34, so I had a 2 tick trade right there, and that is where I ended up for the morning session. Now, highest probability trades in between here, there was one right there, one right here. And that was it. That was it for the trades today. So let me go back here to the spreadsheet. All right, on the spreadsheet. Okay, today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 4th day of May, 2022. We made 34 ticks in crude, 10 ticks in gold, and 4 ticks on the ES. Put us at plus 490 on the morning session. Today it took 5 minutes and 2 trades to get to the goal for the day. At that point, it was up $100 a contract and took a total of 22 trades. So on the month now, we're up $3,577 a contract. That's over 3 trading days, averaging $1,192 per contract per 2-hour trading day. We've gone 147 consecutive business days since our last negative day, and we've gotten 85 out of 85 days this year, gotten our goal. That puts us at $93,328 a contract. averaging $1,097 per contract per 2-hour trading day. And if you were to quit when you got your goal for the day and you were to add 1 contract a month, so far this year you would have averaged $2,440 a contract. There. Now, if you've not taken a free trial with us, go here to eminitrainingschool.com. On this page, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trade challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know you took the free trial, so click on that link. All right? All right, that's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, thank you. Dwayne is ready.
I am ready indeed. Recap of the recap.
Today it took 5 minutes and 2 trades to get to $100 a contract.
Good job. First time I ever rang the bell on camera. It was full of historic first around this place.
I don't see the camera.
No, you can't see it in GoToWebinar.
Okay, it's
only
on
on
YouTube.
only on the YouTube stream. And I'm
Okay.
working with GoTo to see if we can integrate the two, but they seem to want to act standalone. So, and since the bulk of our audience is in the GoTo platform, I'm fine with that for now, as I experiment with video cam for some upcoming interviews I have with Mr. Jeff Zink, who is running for the United States, the Arizona State Congress. Okay. All right. Michael just gave you the recap of what happened this morning in the live training room. That's the first 2 hours of the Wall Street Open from 9:30 a.m. to 11:30 a.m. Eastern. Again, that's for members only and those taking their 1-week free trial. This afternoon broadcast, of course, is available to the public, anyone, anywhere in the world. We are currently in week 196 of Logic 247. Logic 247, if you're new, is our around-the-clock, 24/7 Emini alert service. It includes, along with the E-minis, gold, crude, silver, and the euro. The criteria for publishing alerts, an alert, is when opportunity presents itself. Now, the Globex futures market opens Sunday night at 6 p.m. Eastern. Stock traders have to wait till Monday morning at 9:30 a.m. Eastern, but we get a jump on the week Sunday night. The alert channel opens at 6 p.m. Eastern. So far this week, we've issued a total of 48 alerts. 9 never triggered. We're still waiting on 3. We've had 36 actionable alerts, of which 5 or 14% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. Now, those logic alerts are based on current price action. Our original alert service, the concierge trade alerts, well, those are based on historic price action. And guess what happens when historic price action meets current price action? That's where you'll find some of your highest probability, low risk trade opportunities. Now, we're not a trade calling service. That's not the purpose of why we exist. The purpose of why we exist and do what we do is to teach you how to trade. We want to make you self-sufficient. We want to get you to the point where you're able to look at a chart, see the windows of opportunity, use our indicators, our weekly trading zones to help see the windows of opportunity, and then be able to put on and take off trades yourself at any time of the day or night. Because the global futures markets trade around the clock from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. There is a 1-hour break every day, like today being Wednesday. The Wednesday session officially ends at 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, even though it's still Wednesday night in the U.S. That is the beginning of the Thursday session, and it will be the Thursday session until 5 p.m. Eastern tomorrow. You'll notice these are the same markets that we cover with logic, okay? But these are based on historic price action, and they don't come out around the clock. The CTAs are posted as a static report shortly after the Globex open. Normally it's by about 6:30 p.m. Eastern. I was running a little behind last night, so it was 7:55 p.m. Eastern when I got them out. There's two numbers for each market. The first thing you should do when this report comes out is whatever markets you trade, and again, you probably don't trade them all, and if you're new, you certainly shouldn't try to. You should focus on one or two until you actually learn how to trade. So make note of where price is. We'll use the ES as an example. If you want to grab a screenshot, do that now. Okay? Because we're going to walk through each one of these individual charts after I go over a couple of news headlines that are, some of them are pretty important. Okay? Using the ES as an example, when this report came out last night, our traders went to their chart, their 30-minute chart, the S&P, and drew a line in the sand at 4207, a line in the sand at 4163. Once the report is out, if price starts trending up towards 4207, that's bullish. So our strategy will look for opportunities to be long the market. On the other hand, if price starts trending down towards 4163, then our strategy will look for opportunities to be short the market. In either case, you'll use Logic 247, which is based on current price action, and everything you learn in the live training room each and every day to yourself find opportunities to be long or short the market. Trading's not easy, but it can be simple. So with that, we'll pull this out of the way, and we'll take a peek at some of those headlines I mentioned. Supreme Court Justice, Chief Justice John Roberts on Tuesday confirmed that a leaked draft opinion indicating the court was poised to overturn the landmark 1973 Roe v. Wade decision is authentic. But, he said, it doesn't necessarily represent the case's resolution. Roberts vowed to investigate the leak of the draft, written by Justice Samuel Alito and published by Politico, and condemned it as a singular and egregious breach of trust. Alito's opinion, marked as a first draft, said the court's conservative majority had determined that Roe, which established the constitutional right to abortion nationwide, was egregiously wrong and deeply damaging. Alito wrote that the 1992 Planned Parenthood versus Casey decision, which limited abortion rights without eliminating them, prolonged the court's error. This has never happened before. Now, the leaked draft of a Supreme Court ruling suggesting the conservative majority had voted to overturn Roe v. Wade touched off a political firestorm. President Biden said it would be a radical decision for the court to strike down Roe, the case that legalized abortion and has stood for nearly 50 years. Biden called for Congress to cement abortion protections in law. Former President Barack Obama and former First Lady Michelle Obama said the conservative majority's draft decision would relegate the most intensely personal decision someone can make to the whims of politicians and ideologues. Anti-abortion activists and Republican politicians celebrated the opinion written by conservative Justice Alito. Former United Nations Ambassador Nikki Haley tweeted, "It's a victory for the most basic right there is, the right to life," and I'm going to say it, life begins at conception. And that's all I'll say on that. In other news, Senate Democrats promised to vote on an abortion rights bill. Now, what a lot of people have misunderstood, including some of the media and some of Congress, is that this does not outlaw abortion. What it does is it leaves it up to each state and their voters to decide what's right for them. And so their candidates that are running for Congress can make it a part of their platform or stand against it. And then the people. Sometimes we forget the first part of the Constitution. It starts out with "we the people." We get forgetting a lot. Okay? So each individual state will be able to decide based upon the votes of their constituents and residents what's right for them. Which seems fair in the way it should be. Now there was a poll, and I don't know where this poll was held and by who, but Americans oppose overturning Roe v. Wade by a 2-to-1 margin. Don't know that I believe that. J.D. Vance won the Ohio GOP Senate primary. He wrote the story, Hillbilly Elegy. It was produced and directed by Opie from Andy of Mayberry, Ron Howard. And it's on Netflix, or it was when I saw it, and if you've not seen it, I encourage you to see it. It's called Hillbilly Elegy, and it was written by J.D. Vance, who again last night won the Ohio GOP Senate primary. Job openings and job quits hit record highs. Are we living in some kind of upside down world? How's that possible? Well, here's the deal. Job openings and the number of people quitting their jobs hit record highs in March. According to the Labor Department yesterday, there was a seasonally adjusted 11.5 million job openings, up from 11.3 million the previous month. People quitting their job hit 4.5 million, an increase of 152,000 from February. Job openings exceeded the number of available workers by 5.6 million. The new data showed that the hiring market remains tight as employers continue to face a shortage of available workers. Food services, arts and entertainment, and other consumer-facing industries had the highest rate of openings, with healthcare openings also near record levels. ZipRecruiter said openings at businesses with more than 5,000 workers had more than doubled since February of 2020. The EU proposes an embargo on Russian oil. That's going to put a real pinch in Putin's war chest. And the U.S. classifies WNBA star Brittany Griner as wrongfully detained in Russia. State Department officials confirmed to ESPN and Yahoo Sports on Tuesday. The designation signals a likely intensification of efforts by the Biden administration to bring Griner home. She had a vape pen, not heroin, not MDMA, not ecstasy, not fentanyl, a vape pen, which is increasingly becoming legal all over America, already has here in Arizona. first we had the medical cannabis, and now anyone 21 years or older can walk into a dispensary and purchase the weed of their choice. And the names are ever so clever. Now, back to Brittany. The designation signals an intensification of efforts by the Biden administration to bring her home, as it opens the door for the government to actively negotiate her return instead of waiting for her case to be decided in a Russian court. Now think about it. We're sending arms. We don't protect our own border. We're sending arms to Ukraine so they can protect their border. We left $88 billion of high-tech equipment in Afghanistan. What a 20-year fail that was. In a Russian court right now, with the EU deciding to stop buying Russian oil, or at least putting a proposal out, us arming Ukraine, and all the sanctions that we've done against Russia, for I believe valid reasons, what's the chance that she's going to get a fair case? Slim to none. You're right. Griner was arrested at a Moscow area airport and accused of carrying hashish oil in her luggage. It was a vape pen. Our expectation is that the White House do whatever is necessary to bring her home, said Griner's agent, Lindsay Colas, in a published statement today. Now, tech companies are pushing back against reproductive right restrictions. With the U.S. Supreme Court apparently poised to overturn Roe v. Wade, companies like Amazon, Apple, and Yelp, I didn't even know, Yelp, I'm not a fan, are expanding. That's not news, that's an opinion. And Yelp are expanding. We don't claim to be a news program, by the way. We're opinion and training, etc. They are, Amazon, Apple, and Yelp are expanding support for workers seeking abortions. The surprise Supreme Court draft opinion is especially pertinent for companies with employees in places like Texas and Oklahoma, in which abortions are likely to be immediately banned if Roe is struck down. Amazon's initiative to support employees will cover up to $4,000 per year in travel costs related to non-life-threatening medical treatments, including elective abortion. You can buy a whole lot of Trojans for $4,000. Meanwhile, Uber and Lyft had previously pledged support for transportation for people seeking abortions and will pay the legal fees of drivers sued for transporting passengers to receive abortion services. Elon Musk has said that he could take Twitter public in just a few years. The Wall Street Journal reported that Musk has told potential investors he plans to stage an IPO within just 3 years of buying the company. In more Twitter news, Twitter is testing a feature that will let you share tweets with just select people. It's called Twitter Circle. It will let users choose 150 people with whom to share their tweets, rather than sharing their tweets with the masses. A man scaled Salesforce Tower yesterday. This is a 1,070-foot tower in what he said was a protest against abortion rights. The man climbed San Francisco's tower, Salesforce, and was later arrested. Surging gas prices are crushing the supply of gig economy drivers. During a conference call with analysts, Lyft execs cited gas prices and the lingering pandemic as headwinds for driver supply as its stock plunged 26% after the comments. I filled up my wife's Kia Soul the other day. $55. I think it has like a 12-gallon tank. What was I paid $4.55 a gallon? We saw a price under the previous administration under $2. How did this happen? Oh, well, we won't go into that. Facebook, now Meta, has implemented a hiring freeze on certain engineers amid a spending trim. According to people familiar with the situation, Facebook paused hiring for engineers at levels E3, which is considered entry level, and E4, which is mid-level. And there is, in the final news headline, a new Google feature lets you search using images and text at the same time. Called Google Multi-Search, it can help with online shopping and make tricky searches you're not sure how to describe. All you have to do is just Google this term, Google Multi-Search, and you'll find a set of instructions that clearly tell you exactly how to use it. So, with that all said, let's go to a chart of the S&P 500 E-mini futures daily chart. Remember, if you leave your charts running around the clock, as many of us do, your daily chart needs to be refreshed after the new session starts. I've already refreshed mine. I just wanted to show you how simple it is to do. Now, we have been watching this last leg up for quite a few weeks, and we had our fibs drawn from the low to the high. And as we began the decline, I said once we took out this low, put in on February 24th, the low of the last leg up was March 15th, the Ides of March. And so I have now done as I promised I would. I've drawn reverse fibs. Fibs work the same in either direction, except instead of drawing from the low to the high, you draw from the high to the low. Not low to high, but high to low. So, once we put in the high, March 30th, this was a 24% fib retracement. You can't see it now because we've changed the fibs from regular fibs to reverse fibs. But what you can see is a leg down and a retracement, and then a leg down to the daily BBC. That just stands for bull bear cross. When price crosses below it, we're bearish. When price crosses above it, we're bullish. Below it, bearish. It's pretty simple. Now, that's not just on the daily chart of the S&P. That's also true on all of the 30-minute charts we're going to walk through. It works the same on a 5-minute chart or a 1-minute chart. And it's not just futures. Everything we teach, all the tools that we offer, the indicators, everything, are fluid across all markets and all time frames. A 1-minute chart of crude, an hourly chart of Apple or Google, a weekly chart of the euro, a monthly chart of Bitcoin. How's that possible, you ask? Because price flows the same across all markets and all time frames. Most people won't tell you that because they got a lot of different courses to sell you. We only have one thing. It's called a passport, and it's lifetime. There's no upsells, there's no gotchas, there's no recurring fees. Now, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. It's an underlying principle of how markets work. That principle has been in effect since the inception of the markets, and it will continue to be in effect until the markets cease to exist, which I guess will be about the time Jesus returns. So, got a question here. Let me see what it is. What is your recommendation risk-reward ratio for your concierge trade alerts? My experience is I have a greater than 60% win rate, but my risk-reward is so bad I actually lose money. Well, what I do, Larry, is I teach each and every one of our passport holders how to use market structure to establish the stop loss. I don't know how you're establishing your stop loss. You might be using just some fixed number, just pulled out of the air. Maybe you're using 1.5 times the ATR. That's popular. But I do one-on-one mentoring with all of our passport holders, and I teach them how to let the chart actually tell them where the stop loss needs to be. And if where the stop loss needs to be is greater than $300, then that trade is a pass. Okay? Now, using market structure with all of the alerts, both the logic alerts and the concierge trade alerts, we do not want to risk more than $300 per contract, per trade, but we want to risk less when possible, when our chart allows us to. Now the 30-minute charts, which we're about to go over, that's our roadmap, okay? However, each of our traders has chosen a smaller time frame that works best for them. Some use the 4-tick range to execute and set their stop loss. Others use a 5-minute chart. Some use a 610 tick, a 1597 tick. And some folks like myself use an 8-tick range chart. But again, you never want to risk more than what the potential target offers you. And on a long alert, the final trade to target is always the weekly trading zone above. On a short alert, the final trade to target is the weekly zone below. Now the logic alerts have multiple targets up to the final trade to target, whereas the concierge trade alerts simply have the zone above and the zone below. If it's a long, the final target is the zone above. If it's a short, it's the zone below. So once you take your free trial, if you decide to become a passport holder, I look forward to teaching you how to use market structure to fix the problem that you're currently having. Okay, so this window of opportunity that I drew in yesterday, okay, said if we broke this low, we wanted to take advantage of this area here. Price pulled up to the 24% reverse fib. 2 days now, that has been our resistance. Also, the step line is resistance. However, red and falling, which is bearish and predicts lower prices, when it gets directly below price the way it has right here, then it becomes potential support. And the step line, when it's directly above price, becomes resistance. And so right now, price is trapped between support at red and falling and resistance at the step line. Now, these markets are about to get very volatile, I would think. The last Fed announcement was pretty explosive. When they released the minutes of the last Fed meeting, that was the day the markets really went crazy. Let me turn this thing off so it's making noise. So again, at 2 p.m. Eastern, I encourage you to put your mouse away unless you're a very experienced trader or you're simply trading in sim, okay? But you're supposed to treat your sim account just like your live account. So I still say put the mouse away. Let the Fed announcement come out. We're expecting a 50 basis point or a half a point increase in the Fed funds rate, which affects, car loans, home mortgages, and a host of other things. It is another tax on the people. And somehow the Fed, who Jerome I've pretty much had a lot of respect for, he's somehow been convinced by some economists that at this point in time, with all that's going on in the world, raising interest rates is going to fix things. I'll be looking forward to seeing how that turns out, very painfully. So if we break today's low and we break yesterday's low, then this window of opportunity down to the low of May 2nd is still valid. And that's roughly 41.17 down to about 40.62. That's a good about 50-60 points at $50 a point. Very nice trade opportunity. However, you don't trade off the daily chart, you trade off a smaller time frame that you've become comfortable with. But as a CFRN trader, what we use is the 30-minute chart as our roadmap. This trend line's been broken, so get rid of that. We don't need it. The vertical line here separates today, Wednesday, from yesterday, Tuesday. Now the CTA list that I just showed you are for today, so let me tighten that up. Let me extend that. Okay. So the CTAs last night said to be long at or above 42.07. We never triggered on the long side. However, many of our traders, because they saw that price, we had blue and climbing, and they saw price was trending up towards 42.07. Once you understand our strategy, our methodology, how to read our charts, and our indicators, and how the weekly trading zones play in. By the way, we've published the weekly trading zones since December 14th of 2009. So we have well over a decade of data that tells us how price behaves around the weekly zones, and all of our passport holders learn how to use that information. You won't find too many things being used out there on the internet that have been around for that long. And the most common thing to happen at a weekly trading zone is consolidation. When price rallies up to a zone, we expect resistance, as we saw all yesterday afternoon. Yes, we did spike above the zone, but we never really pulled away from it. Okay? So here's the open last night. We started a little bit of a rally. We pulled back to the BBC. The pullback holds more often than it doesn't. Red and falling turned to blue and climbing, which made this a very nice opportunity right here. And it did take the market up to 41.91. So certainly a person could have gotten their goal for the day there, but that's not where the CTA triggered. The longer you're with us, the longer the more time you put in understanding the methodology and the strategy, you'll find that you won't wait for the CTA to trigger, because there's all these points to be had on the way. Just like when price broke below the BBC and below, when price drops to the zone, we expect support. When it moves up to the zone, resistance. When it pulls down, support. We had consolidation here. Blue and climbing turned to red and falling. And price is starting to rally. We might see that 42.07 based on the volatility to come out of this Fed meeting. which is only an hour and 5 minutes away at this point. Now, important to note, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. On this first trigger right here, at 41.63, we dropped to 41.50 and a half. We'll just call it 41.53 to be conservative. 10 points, $50 a point, $500 per contract traded. That's what the market made available. Now, why did price stop there? In most cases, all you got to do is look left. The market's going to tell you where to expect support and where to expect resistance. And remember, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance. It's a never-ending cycle. Now, this candle came within 2 ticks of getting back above the trigger and giving us a second trigger. So in actuality, we only had the one trigger, which dropped all the way down to 41.43, which is 20 points at $50 a point. So if you rode the thing all the way down, remember, this candle closed here, opened here. We had a red candle that took us down 20 points from the trigger, and then look left, right here. Buyers came in, right where they came in yesterday, and have driven price back up through the BBC. We're above the weekly trading zone. We've got 3 minutes left in the life of this candle. If we break this high, don't be so quick to jump the gun, because we've got these highs to deal with. Now, buyers tried very hard to push price higher up to the next zone yesterday. And when I say buyers, I'm speaking of institutional buyers, the deep pockets that move the markets. Hedge fund managers, institutional traders, the deep pockets. We retail traders, we're barely a blip on the radar screen. Even once we've earned the right to trade 3, 5, 10 contracts, institutional traders are trading hundreds of contracts at a time. Okay? Traders for Goldman Sachs, other places. That's the beauty of futures, though, and the fact that there's no market maker in the futures market. If we're trading one contract because we're just learning how to trade, we get the same respect as the Goldman Sachs trader who's about to put on a 1,000 contract trade. And he doesn't get ahead of us in line because he's got a bigger order. No. First come, first served. That's important. I spent a lot of years trading stocks, and market makers, sorry guys, I know this doesn't pertain to all of you, but some of you are just downright evil. I pray for you. Start doing the right thing, okay? Now, market makers play probably a bigger role in the lower cap stocks, things like you'd find in the Russell 2000, which is 2,000 small cap companies, and the Dow 30, S&P 500. They tend to be a little more legitimate, okay? So if you're trading stocks priced below $5, a market maker, he's there to create an orderly market, ensure an orderly market. But is he truly working on your behalf or the behalf of his buddy? We'll probably never know. And that's okay, because we trade futures mostly. But now, because we've rolled everything out, all of our indicators on TradingView, you're able to use our methodology, our strategy, our indicators, etc., to trade stocks, to trade crypto, to trade Forex, to trade options. We've said since our inception, which goes back to 2005 is when we launched. 2008 is when the current live training room came into existence. We've always said that everything we do, everything we teach is fluid across all markets and all time frames. And now our traders are getting a chance to put that to work, trading their favorite stocks, their favorite crypto, their favorite Forex pair, using our methodology, our strategy, and our indicators. And when you become a passport holder, that's lifetime membership, no upsells, no recurring fees, and you own the indicator set for life. With us, lifetime really does mean lifetime. And not only as a passport holder do you have access to live training with a live trader each and every day for 2 hours in an interactive environment where the trader is putting on and taking off trades, explaining every trade they take, every move they make, and the rule behind it, while you trade along in sim until you earn the right to go live. The more questions you ask, the sooner you'll get there. Our 24/20 blueprint is designed to help a trader go from 1 to 20 contracts over a period of 24 months. You're going to start in sim, even if you have trading experience, because obviously if you've come to us, whatever you're doing, not quite working for you. So we want you to put together 10 consecutive days in a row in sim where you reach your goal in 10 trades or less. That's when the blueprint will give you the green light to go live with 1 contract. Now that you're trading real money, the goal is to increase your account balance by $2,000. Once you achieve that, the blueprint will give you the green light to add a second contract. The second contract is a big deal because your first contract is funded with your startup capital. But the second contract is funded with profit you earned in the market. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10. You can grow your account size as large as you want. Just never add more than 1 contract at a time, and only add an additional contract with profit you earned in the market. If you follow that protocol, it makes it far more difficult to blow up an account than with some other methods, strategies, gurus, etc. Okay? All right. So we know what happened with the S&P, the CTAs. I've shown you the recap of the Logic 247s. Let's jump to the Dow. No trigger on the long side. We did trigger on the short side. Interesting to see markets climb as we head into a 0.5 point interest rate hike. Obviously that hike, since we've been told it was coming, has already been baked into the cake. So with no trigger on the long side, here's where we opened. We consolidated along the VBC. We made a run. And where did we find resistance? Look left. It's right there. Look at the horizontal line on my cursor. Here, 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 here. It's all tied to here. Okay. Then we get back below the trigger, or we get back below the BBC. We've got red and falling at our back. We trigger. Now 33,005 was the trigger. This first little trigger only dropped at 33,092. So that's 13 points, $5 a point. That's not quite $100 per contract traded. And then we get back above the trigger, trigger again. And This candle closed here, opened here, and continued down, and it took us to 32,925. That's 80 points at $5 a point. That's $400 per contract traded. Now again, this is Wednesday. Here's yesterday. Price found support at the previous bullish cross, and then price found support at the previous support. Whenever there's a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. The same is true of a bearish cross. Like this one right here. When price came back, resistance. First time up or first time down will almost always be good support or good resistance based on the nature of the cross, whether it's bullish or bearish. Larry asked, if you triggered to the short side, did you go short below 33,005? That depends, Larry, on what time frame you're using. As long as you don't have to risk more than $300 per contract per trade. And the smaller time frame that you're using, okay, it could be a 5-minute chart, could be an 8-tick range chart. As price approaches this area, I would have most likely taken my profit. Once we got below the BBC, there was plenty of room to get my goal for the day on that candle, or that candle, or that candle, before we even hit the trigger. Okay? Learning to use multiple time frames is incredibly important. It's very difficult to be a successful trader without the use of multiple time frames. Okay, so that covers the Dow. Let's go to the Russell. So I'm simply showing you the big picture view of the 30-minute chart. Where you trigger in, where you set your stop is going to be determined by the time frame that you've chosen to trigger off of. Okay. We had two-sided action on the Russell. That means we triggered both on the long side and the short side. Here's where the market opened last night. We overcame red and falling, which became blue and climbing. 1902 was the trigger, and we put in a high at 1903.60. So 160 bucks per contract traded. Back to the BBC, the pullback holds more often than it doesn't. No, I take that back. From 1902 to next, we were just shy. It takes 2 points to make 100 bucks in the Russell. So we were just shy of $100 on that one. Okay, and then price pulled back to the BBC. When price pulls back to the BBC, we expect it to hold. It holds more often than it doesn't. There's over 2,000 videos on our YouTube channel, youtube.com/CFRN. And for anyone that's new, I encourage you to spend some time. Don't just watch yesterday's show or the day before. Go back a week, go back a month, 6 months, a year, go back 2 years. You'll find us using the same principles, the same indicators, the same logic, and you'll see that price is still behaving around the weekly trading zones the way it has since the first time we published them for our members way back December 14th of 2009. So we get a trigger here which takes us right up to the target. Remember, on every long trade, the final trade to target, on every alert, the final trade to target on a long is the zone above. The weekly zone is 1907/1908. Why is it the target? Because when price rallies up to a zone, we expect it to be good resistance, as it was yesterday, as it was today. Okay, from 1902 to 1907, it's 5 points, $50 a point, $250 per contract traded. Then price got below the BBC and continued down, blue and climbing, rolled over, became red and falling. I want you to look at this candle and the parallel of the step line and red and falling. That is golden, okay? That is your best opportunity to take advantage of what the market is offering you. And once price took out these lows right here, traders who've been with us for any length of time would have taken this window of opportunity to get the goal for the day before they even got to the trigger. But we did get to the trigger at 1889, and we dropped all the way to the target. Remember, the zone below on a short is always the final trade to target. So from 89, now the zone is 82/83, so that's a 6-point drop at $50 a point. That's $300 per contract traded. Once an alert triggers, like here and here, there's a greater probability of it triggering multiple times than not triggering multiple times. So we pulled back to the BBC. Remember, the pullback holds more often than it doesn't. It held here, and it held here, it held here and here. But we know eventually price can only go so high or so low when it's going to retrace, because that's how the market moves in legs. Leg, retrace, leg, retrace, leg, retrace, until price can go no higher because no one's willing to pay that price, and then it turns around and heads in the other direction. This high on this candle right here, 1908.20, the DOM was filled with people trying to sell above. There were plenty of orders, plenty of contracts on the offer, but no one was willing to pay at that moment in time 1 tick higher. That's why that's the high. So we come down, we hit our target, we overshoot it a little bit, okay? Then we pull back up to the BBC, the pullback holds, and down we come through the trigger again. This candle opened here and dropped here, so that wasn't a trigger, but this is 1889, and so far the market has given us 84.7, we'll call it 85. That's 4 points, $50 a point, $200 per contract traded. Now, I pointed out how good the trading is when you get the step line and red and falling parallel like this. But once the step line crosses over red and falling, that's an indication that the market may be running out of steam. When the step line or red and falling gets directly below price, instead of being your friendly companion, they become an obstacle to what you're trying to accomplish. Now again, if your goal's only a couple points a day, you got it already on this candle. Now 2 points a day, $100 doesn't sound like a lot, and in this day and time it really isn't. But again, the 24/20 blueprint, once you go live with one contract and increase your account balance by $2,000, you're going to get the green light to add your second contract with profit you earned in the market. And then the third, and then the fourth, and then the fifth. By the time you've earned the right to trade 10 contracts, 2 points is $1,000 a day. And that puts you in the top 3% of wage earners worldwide. Is it going to happen overnight? No. If it did, we'd call it the overnight blueprint. It's called the 24/20 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. Okay? Still got a red candle. This is our Russell, man in the street. We saw the S&P rallying, the Dow rallying. But the Russell, which is sometimes an early indicator of market sentiment, we got 45 minutes to the Fed announcement. So let's get through the rest of these. Here's the NQ. Okay, so the long CTA was 13,152. The high of this candle was 55.50. It's 3.5 points at $20 a point. It's a little over $60 per contract traded, and nothing to write home about. But you could have got your goal for the day as you saw price rising up to the trigger. Both here and here. 10 points on the NQ at $20 a point, that's $200 per contract traded. So you really only need a 5-point move. Then price gets below the BBC, blue and climbing, turns to red and falling, and we drop right to the target. The target is the zone below, 13,051 to 13,052. From 82 to 52, that's 30 points at $20 a point, $600 per contract traded. And price kept dropping. I mentioned earlier that when there's a bullish cross that leads to an extended move, like this bullish cross led to this extended move, the first time price revisits that area, it will almost always be support the first time down. The same is true of a bearish cross going in the other direction. It will become resistance the first time price revisits the area of the cross. It's a powerful, powerful tool to have in your toolbox. Now this happened way back when the market, this bullish cross took place on Tuesday, right as the market opened. Price was up here, but it created the bullish cross down here. Actually, the bullish cross happened back even on, this is Tuesday, even on Monday is when that bullish cross took place. Although it shows up here, it looks like it's just a little over the line because we know indicators lag. Okay? All indicators lag. Ours are no different. This is why it's so important for me to teach you how to read price. Okay? We're not pure price action traders because we do use our zones. Okay? We do use our indicators. The CFMA1, which I call blue and climbing or red and falling for obvious reasons. Now, here's an issue. Price is about to trigger again on the short side, but we're above the BBC. We do not sell. When I teach you discretionary trading, I will teach you that you only buy above the BBC and you only sell below the BBC. Because Michael is using the fast 4-tick range chart in the morning, he doesn't adhere to that principle because he's moving from multiple markets, explaining everything he's doing, answering questions in the question box. So he's just trading what's in front of him, but our strategy, what's under the hood, the principles upon what upon which our strategy is built and everything we do depends on is the same. Sometimes people will go, well, I tried following Michael, he's a little fast. I want to learn how to do what you do. Well, I'm doing the same thing. I'm just slowing it down by putting it on a 30-minute chart and using an 8-tick range as my trigger chart. All right, so we know what happened to the NQ. Let's go to crude oil. Giddy up. Crude inventories were released today, and so that attributes to part of this. But this happened around the London Open. Here's 2:30. Here's 3 a.m. Eastern, the London Open. Now the alerts went out at 8 o'clock last night. The trigger came just ahead of the London Open. But once you got this bullish cross here and price started to climb, certainly could get your goal for the day before you even got to the trigger. Okay, and the target was 105.25. So from $104 to $105.25, that's $1,250 per contract traded. Right there. $1,250 per contract traded. If you've earned the right to trade 2 contracts, it's $2,500. I just want to caution anyone listening. If you become a passport holder, don't be a cowboy. Don't just go in trading 10 contracts because, well, anybody can get 2 points a day. Well, I believe anybody can, with some training and with some understanding. Or you can be Barney Fife and keep shooting yourself in the foot. Okay? This is a career. This is a life skill. It's worth the time and the patience required. You know, without patience and self-discipline, you're never going to become a trader. All great traders have a zen amount of discipline and patience. They see where the opportunity is, and they don't have an itchy trigger finger. They're perfectly willing to wait for price to get to the area where the opportunity exists with no obstacles in the path. Fine example. We'll call it 108 bucks up to 109 bucks. That's $1,000 per contract traded, with no obvious obstacles in the path. If we scrunch up, we can see our last obstacle to this would be 107.99. So you might want to go, to be safe, 108.10 to 109.10, or let it ride all the way to the zone. Although the Fed's coming out with their statement and then their Q&A session, the fireworks will begin in 35 minutes. Now remember, Jerome will deliver a prepared speech and go away. That's not the end. He'll be back at the podium at 2:30 p.m. Eastern. Actually, the Fed announcement will come out at 2. You won't see Jerome then. At 2:30, you'll see Jerome show up at the podium. He'll deliver the prepared speech, which has already been shared with the world. You can find it somewhere on the internet. It wasn't leaked. It's published. But he reads it, and then he does a Q&A session. Okay? And that's when the markets can get really volatile, because there's going to be a lot of questions about interest rates. How high could they go? How fast could they increase them? Is there any possibility that because of they're using higher interest rates to fight inflation, which just, I'm no economics professor, I'm just a humble boy from a small town in Georgia. So I'm sure they know far more than I do, but I do know this: the Fed itself is illegal, immoral, and if you've not read The Creature from Jekyll Island, if you're a trader or you're trying to become a trader, you need to understand what the Fed is, how it was created, and how it harms the American people. Okay? Now, it's lots of fun when the Fed is printing money, pumping it into the economy, and every stock in the marketplace skyrockets. But eventually you have to pay the band. That's what we're doing now with this tightening. They're stopping. We're stopping buying our own bonds at the Treasury auctions. China really doesn't want to buy them anymore. Russia certainly isn't going to be buying any. I can't think of a worse time to raise interest rates than right now. But again, I'm just some country boy from small town Georgia. Now notice this high. I mean, we were building a big strong green candle until what? We found resistance. That area will remain resistance for days, weeks, months, years, until broken. It could be broken today, it could be broken in the next hour, it could be broken in the next 5 minutes, or it could take 5 years. Trade what's in front of you. Okay, that's crude oil. Lori asks, what was the title of the book you mentioned about the Fed? Hi, Lori. It's The Creature from Jekyll Island. It tells about a train trip that some wealthy businessmen, Rothschilds, etc., took to Jekyll Island, South Carolina, back in the 30s, and cooked up this idea to make themselves and their families wealthy forever. And because the book was published in the 30s, I think, it's in the public domain now. So you can go on the internet and download or just read off the internet, a legal free PDF copy. Or you can actually buy the book still if you want. But if you want to just read it off the internet, you can. You're welcome, Lori. As always. Okay, so crude traders, price was very good to us. Even after we went through the target, we went through the next weekly zone where we found some resistance. We pulled back to the BTC. The pullback held. Holds more often than it doesn't. Now we're dealing with resistance from last Friday. No, Wednesday, Tuesday, Monday. Yeah. Last Friday's high is holding sway over the market today. When you teach your children to cross the street, you always tell them to look both ways. Trading, you just have to look right. Okay? Very good. All right, got a couple more markets to cover. We'll get through them pretty quick. I know you want to get some popcorn before the whole Fed thing. Well, most of the markets were very kind. Gold may not have been as kind as we would have liked last night, but you see this just sideways, stagnant consolidation. Not unusual ahead of the Fed. All right, this is where the market opened. We dropped below the BTC, so we're thinking short. Price gets below the BTC. We hit the trigger at 1864. The lows put in at, we'll call it 62. It's 61 and a half, so it's $250 per contract traded. And then price gets back above the trigger. But you've got red and falling so snug up against that. You have to know that it has the potential Now the low was actually 63.2. So there was 80 bucks, but remember when the step line gets directly below price, it can begin to act as support. Why? Because it's on its way to becoming blue and climbing. So, not a valid trigger, not a valid trigger, not a valid trigger. On the upside, okay, we triggered at 71. This candle closed here, but it opened here and continued higher up to 1872. $100 per contract traded. We pull back to the BTC, the pullback holds more often than not, and we get another move. This time it's $120 per contract traded. And then we consolidate at the BBC, blue and climbing, becomes red and falling, which gives us the opportunity to take advantage of this short. This short here, it's not a good, we still got blue and climbing in the picture, even though it's up above it. We're just getting through the BBC. Here, with red and falling in the picture, that makes this one delightful. As Raymond Reddington would say, delightful. From 1864, we traded down to 1861.20. So that would be $280 per contract trade. And this picture will probably change once the Fed gets going. Okay? Is it going to go up? Is it going to go down? Probably both. Which makes it like gambling, and our style of trading has nothing to do with gambling or luck. It's all based on logic. There's no magic, there's no secrets. It's purely logical how markets trade. Now, in the Logic 247 channel, we have issued, since the inception, over 10,300 and something individual alerts. Every one of them a trend trade. Now, what I mean by trend trade. A trend trade is defined by the 30-minute chart. If price is above the BBC, then there's only going to be a long alert. If price is below the BBC, there's only going to be a short alert. Now, sometimes in the discussion group in Telegram, which it's so critical if you're a member, passport holder, that you tie into that discussion group, okay? Because it's not just me yammering away or Michael. Stefan and Owen and other traders are sharing their thoughts, their ideas. I don't mean to shortchange anybody by not mentioning your name, but you need to, that's part of what being a passport holder or being a member of the CFRN family is all about, is that you have someone who speaks your language. You're taking the same journey. You're learning the same strategy, using the same indicators. And unlike so many dreary trading chat rooms and bulletin boards out there, our place is a happy place. Why? Because people are happy. Why? Because they want to learn how to trade. And they are. And they see their progress and their success, and they take 2 steps forward and take a step back and then another 2 steps forward. Okay? We're not the Holy Grail. We're not a magic bullet. Over those 10,300 individual alerts that have been issued in Logic 247, on average each week, 20% get stopped out. So while we don't know what's going to happen next in the market, no one does. I don't care how much they lie. That's not how God created the universe. Adam was never given the ability to change the past or to know the future. And those two things are inextricably linked for eternity. So while we can't know with certainty what will happen next, we can know with a great degree of certainty what the next high probability move is. Up or down, and where it's most likely to find an obstacle, also known as a target. All right, just two more markets to cover. Silver. Silver is an unusual animal. When the price of silver moves $1, if you're trading one futures contract, that's worth $5 grand. When the price of silver moves 2 pennies, that's $100. Okay. So we had a trigger at 22.70 and we put in a high at 71, $50. But before that happened, this was the open below the BBC, red and falling, we catch a trigger, and from 22.52 we dropped to 22.49. That's 3 pennies or $150 per contract traded. Then we had that $50 trade, and then as price came down through 22.52, the target was the weekly zone below 46.47, so that's $250 per contract traded. And then it kept going, and then it pulled back up almost to the weekly zone in the BBC. So there's resistance here, but look at blue and climbing is creeping into the picture. So is there a good window of opportunity here down to support? Not really, because you got this wick and this wick and this wick, any one of which could become good support. Your window of opportunity is if price overcomes blue and climbing. Now there's something to talk about. 22.28 down to 22.24, $200 per contract traded, and it could keep going down to the zone. Okay. All right, one more market, the euro. Trying to get this done quick because I don't want to steal the Fed's thunder. As if I could. Okay. All right. 270 was the short trigger, and we dropped to 240. That's not enough to even really talk about. On the other hand, we did get a long trigger that took us up to the target from 525 to 615. That's roughly $100 per contract traded. Then we got back below the trigger. See how the pullback to the BBC held? Sent us back up again. Then we pull back to the BBC again. And we didn't get below the trigger. We touched it. And it popped right back up to the target. But notice this blue and climbing. See how the market moves? Leg, retrace, leg, retrace, leg, retrace, leg, retrace, until price can go no higher. When the market finds resistance, it's going to turn around and go find support. When the market finds support, it's going to go turn around and look for resistance. We got red and falling coming into the picture. This pullback may not hold. Now, why'd price stop there? Well, we could say that it was that swing high right there. We could also stretch back 1, 2, 3, 4 trading sessions. And we could draw a trend line, which in my mind's eye, I saw us hitting that trend line, but we actually didn't. So we'll have to go with answer number 1, this previous swing high. Remember, once the market finds resistance, it's going to remain resistance until broken. Now, once the market finds support, it's going to remain support until broken. That brings us around the world, back to the daily chart, where it doesn't look like much has happened from the high level perspective. Whatever market you trade, you may not trade the S&P, you may trade crude or gold, whatever, the euro, the Dow. Start your session with the daily chart. Just spend a couple minutes, because the institutional traders, they look at daily, weekly, and monthly charts pretty much the way you and I look at 30-minute and 5-minute and tick charts and range charts. You want to see what the big money's doing, because our strategy is not designed to outsmart, outfox, outrun the market or beat the market of all things. The market's our business partner, our friend. We don't want to beat the market. We just want to identify what the market is doing, and then we want to duplicate that. We want to do exactly what the market's doing until we reach our goal for the day. Then we put our mouse away and come back to trade another day. It's not going to happen overnight. You're going to have to put in some effort. If you want to become part of the CFRN family, this passport is for life. It never expires. You're either going to be the 9 out of 10 or the 1 out of 10. Now, I can't guarantee you that being a passport holder is going to make you the 1 out of 10, but it's going to at least give you a shot, because 9 out of 10 fail simply because they don't have a teacher. We give you a living, breathing teacher every day for 2 hours, putting on, taking off trades live in real time while you trade along in your sim until you qualify to go live, and answering all of your questions. Remember, the more questions you ask, the sooner you're going to learn what you came here to learn. Okay? Now, along with having that teacher every day, you have access to unlimited one-on-one mentoring. There's no data cap, right? I know a lot of cell companies have unlimited data, but in tiny print till you hit a certain point, and then they throttle you to slow your data down. With us, lifetime really means a lifetime as defined by Merriam-Webster. And unlimited one-on-one mentoring really means unlimited. There's no cap. A lot of our new members will book 2 sessions a week, one with me, one with Michael. That might go on for a few weeks, a month, 2 months, I don't know. And then maybe it's once a week, and then maybe it's just whenever you need help. But the important thing to understand is that you always have someone to help you. You simply book your mentoring session, and we actually show up. Okay? And trading's a lonely business. You've got a family, you've got a home, you've got a place to hang out in the members-only discussion group in Telegram. And by the way, if you're not familiar with Telegram, it is a free messaging client. It's safe, secure, there's no ads, no spam. Well, not in our channels, because our moderators make sure none of the garbage creeps in. And some of that stuff can get pretty creepy. You're going to learn our methodology and strategy, which works not just with futures, but stocks, forex, crypto, options. Same with our indicators. You will receive the Logic 247 alerts around the clock. You'll get the CTA report every night when it's published. You'll have access to our members-only workshop every Thursday night. It's everything a trader needs, all under one roof, at one low price. A price so low that it's less than what some gurus charge for an hour of their time. This is a business, okay? This is an income stream for us. But we've made it affordable so that those who are struggling and have spent lots of time and lots of treasure trying to figure this out. Because there's a lot of dark alleys on the way to Wall Street where the guy opens his trench coat and says, "Psst, hey buddy, wanna buy a watch?" Yeah, it says Rolex, but it's not, right? We invest our time in you to help you get from where you are to where you want to be. Again, I wish I could guarantee you success, but I can't, because it would be wrong. Because I don't know what you're going to do with the information we give you, the rules we teach you, the indicators we provide you with. I don't know if you have discipline and patience. Not everybody's cut out to be a trader. I can teach you how to play baseball, but I can't promise you that you'll pitch for the Yankees. I can teach you how to trade, but I can't promise you'll be the next rock star trader. But hopefully, you can learn enough to start to build your own personal steady income stream. To get your passport, just go to eminifutures.com. It's pretty self-explanatory. Click a couple buttons. If you have any questions, though, be sure to call Valerie, 949-42-EMINI, or send an email to support@cfrn.net. Okay, to wrap things up, we'll go to our good word for the day. Yesterday we talked about having confidence in your prayers. Our prayers don't get answered instantly most of the time, and they often don't get answered in the way that we expected them to be answered. There's a country western song, one of God's greatest gifts is unanswered prayers. He knows what's better for us than we do. Today we're going to talk about the benefits of being unselfish. Philippians 2:4. Don't look out only for your own interests, but take an interest in others too. Unselfishness does 3 things for you. Now, that sounds kind of funny, because unselfish, well, and then does 3 things for me. Oh, so I was told, my wife and I first broke ground and started the orphanage in Uganda. I was told by some people that what I was doing was actually selfish, not unselfish. I'm like, what are you talking about? And they said, the reason you do the things you do in the community and in faraway lands is because it makes you feel good. So I had to chew on that for a bit. And I said, okay, let's say it does make me feel good. And it also gives an orphan a home and an education and people who love them and people who help them understand who their Heavenly Father is and that He has not forsaken them and that He loves them. If that's selfish, then may I be selfish to the day I die. So, unselfishness does 3 things for you. It improves the quality of your life. It gives you an appreciation for life and a comprehension of its higher values. Seeing people in need and giving to meet those needs sets a lot of things into perspective. John Maxwell writes, "There is no life as empty as the self-centered life. There is no life as centered as the self-empty life. If you want to enhance your world, focus your attention on assisting other people. Number 2, it makes you part of something greater than yourself. In the mid-1980s, Merck & Company, the global pharmaceutical corporation, developed a medication to cure river blindness, a disease that infects and causes blindness in millions of people, mainly in developing countries. While it was a good product, potential customers could not afford it. So what did Merck do? It produced the drug anyway and announced that it would give it free to anyone who needed it. As a result, they gave away more than 250 million ivermectin tablets. You may have heard that term before. I did say ivermectin. George W. Merck says, "We try never to forget that medicine is for the people. It's not for the profits. The profits follow. And if we have remembered that, they have never failed to appear." So the lesson to learn? Simple. Instead of attempting to be great, be part of something greater than yourself. And number 3, it creates a legacy. Jack Belusic, a former president of True North Communications, said this: "Learn, earn, return. These are the 3 phases of life." When you think unselfishly and invest in others, you gain the opportunity to create a legacy that will outlive you. And that should be your goal. When they put this old body in the ground, I have every confidence that at New Hope Orphanage in Kampala, Uganda, East Africa, children will still be being loved and fed and educated and growing up in a very tough place to be the people that God created them to be. And again, if my motives are selfish, so be it. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.